Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Queenie Good Night. Today is Friday, January 9th. I'm analyst Jung Ji. Remember to like, subscribe, and share during class. If you have any investment questions, feel free to leave me a comment. If I don't get a chance to answer today, I'll try to respond next week. All right, let's first take a look at today's investment highlights. Since it's Friday, I want to wish everyone a great weekend. For those of you joining online, I guess most people are probably heading out since it's Friday. Going out for outdoor activities, running around everywhere. Anyway, just remember to relax your shoulders. If you don't have time to attend class, remember to watch the replay on Saturday or Sunday. Also, good evening to Hui Huan, and hello to Fei De Yu, Kei Coco Lee, Brother Yulin, and Melissa. Good evening to all of you, and good evening to the staff as well. All right, so today is actually the most important day of the week for major data releases. Especially after the US government shutdown, they've been gradually releasing some outdated data, like figures from September and October. But now, starting today, you can see that a lot of the data being released is much more current, including things like December's non-farm payrolls and employment numbers, among other updates. All of these will have a significant impact today, so the last major data releases of the week will be previewed for everyone in a bit. This includes things like the unemployment rate, non-farm payrolls, and very importantly, today, the Supreme Court might announce its stance on whether the US tariff war is legal. In addition, President Trump, of course, has introduced a lot of policies to boost his poll numbers. This week, we've seen measures like lowering tariffs on lumber and furniture. As we mentioned yesterday, there have been many actions, including tax cuts, tariff reductions, and anti-inflation measures. Today, I want to add that the so-called presidential QE has also been rolled out. So what exactly is this presidential QE, and how does it help the stock market and the economy? As for the industry side, there are rumors about TSMC. Are they really losing orders to Samsung? If Samsung does manage to secure those orders, what kind of impact will that have? In addition, TSMC also released its latest fourth quarter and full year revenue figures today, which will certainly have an effect on TSMC's upcoming earnings call on January 15th next week. It actually serves as a very important indicator for market direction. So what exactly is going on with TSMC, and how should they respond? And what additional insights can we get from their revenue situation? Tonight on our program, we'll break all of this down for you one by one. In addition, there's another company involved in a takeover offer, an offer that was surprisingly rejected. Who turned it down? It was Warner Bros. As we've previously discussed, both Paramount and Netflix had made very generous acquisition offers. But what about Warner Bros? Today, they once again rejected Paramount. Why does Warner Bros feel this way about Paramount? And what is Paramount's position and background in all this? After rejecting the offer, what changes might we see in this politically charged acquisition attempt? We'll explain all of this for you tonight. Good evening, everyone. So who is this? Is it Huang Weiyang? Wang Weiyang, hello, hello. Is this a new student? Good evening to Master Alice as well. Okay, let's first take a look at the economic and math section. At 9:30, we'll go over today's economic data, which is extremely important. First, it's the most up-to-date data for December. Second, among all the employment market data, this is the most important, the US unemployment rate and non-farm payroll numbers for December. So what about this data? The previous non-farm payroll number was 64,000, and the forecast is 60,000, which is pretty good. There's still some growth. When the data is released later, as long as it's above 60,000, the market will interpret it as the job market not collapsing dramatically. Of course, if the employment number jumps above 60,000 this time, to some extent, it means the economy isn't in recession, but from another perspective, it also means the Federal Reserve won't be in a hurry to cut interest rates in January. If they're not rushing to cut rates in January, then of course the momentum in the stock market for January might, well, everyone will worry it could come to a sudden halt. So in a way, whether the economic data is good or bad, there are different interpretations depending on one's standpoint, but overall, looking at the current situation, the US economy is indeed not heading toward a recession. At most, the job market is just cooling off or becoming more lukewarm. As for the unemployment rate, the previous estimate was 4.6%, and it's expected to stay around 4.5%. So this figure, whether it stays at 4.5 or 4.6, is still within the controllable range for Federal Reserve Chairman Powell. We've been emphasizing this point repeatedly in our program before. Back in December of last year, during the interest rate decision meeting, Powell kept emphasizing to everyone that regarding the job market and the unemployment rate, at most it might increase by 0.1 to 0.2 percentage points in the future. In other words, based on the current level, it would fall around 4.5 to 4.6%, which is still within the controllable range. So I'm giving everyone a heads up and an estimate now, and later at 9:30, we'll take a look at it together. Master, good evening to you, and also to Panmila. Panmila, when I see your name, I think of Pandora, and it reminds me of that Pandora red wine that Will Don-Roo used to advertise. All right, Panmingna, my classmate, good evening. Panmingna, don't forget, today we're waiting for the Trump verdict. Yes, today we're waiting for the tariff verdict, but it's just that the verdict, what exactly will it be? What time exactly? Some people say it's at 10 o'clock tonight, Taipei time. Some say it's at 10 p.m. Taipei time, or maybe even later. Right now, there isn't a definite set time for it. But yesterday on the show, we kept reminding everyone, no matter whether the tariff announcement is declared legal or illegal. So regardless of whether it's legal or not, in fact, when it comes to the current stock market, you just need to stick to one principle. Whenever the market hits a new high, remember to take some profits off the table. As long as there's a new intraday high, make sure to lock in some gains first. Then, when the market pulls back, look for a buying opportunity. This kind of strategy is a safer way to handle the current uncertainties. So if the tariff war is legal, and by legal I mean it can be enforced with authority, Trump is enforcing it legally. So there's no need to worry too much, because it's already being carried out legally, right? And since this year, as we mentioned, the US is heading into an election, with the election starting in November, Trump, in order to boost his poll numbers and campaign prospects, won't be overly rigid, even though he has the legal authority. If he keeps pushing hard with tariffs, it's not likely that he would do so just to boost his poll numbers, save the economy, or support people's livelihoods. So when it comes to tariffs, he's more likely to take a step back, to be more accommodating. Now, if he were to declare that the tariffs are not legal, then of course small and mid-cap stocks would start to rise. But if they do go up, be aware that it could just be a case of buy the rumor, sell the news, since after all, both US and international stock markets are at historically high levels. If tariffs are announced as not legal, watch for a buy the rumor, sell the news situation. After volatility and consolidation, waiting for a pullback before buying is a good strategy. That's additional information related to this data. Another thing also announced at 9:30 p.m. is the average hourly wage and its monthly rate for December in the US. If the monthly and yearly rates for hourly wages don't spike, it means labor costs in the US aren't surging. If labor costs don't inflate excessively, then of course, business costs won't rise too much either. If business costs aren't pushed up much, inflation is less likely to reflect in prices. So when looking at monthly and yearly average hourly wages, it's a very important reference data point. As of 9:30 p.m. tonight, the monthly rate was 0.1, and it's expected to rise slightly to 0.3. As for the annual rate, the previous value was 3.5%, and the expectation is 3.6%. Also at 9:30, there's another data point related to real estate, but it's relatively neutral, so you can just take note of it. It's about new housing starts and total building permits. The potential for new properties is 1.307 million. In fact, the last time this was announced was around August or September, so there's a gap of several months in between. Because of the US government shutdown, a lot of data for 2 or 3 months wasn't released. So the last available data from around August or September was 1.307 million. The expectation is 1.325 million. Total building permits, previous was 1.33 million, expectation 1.35 million. This data is neutral, so it has little market impact. However, the 11 p.m. data is more important. If you can't sleep at 11 p.m., take a quick look. Although it's the weekend and everyone should be having a happy time, I really like Fridays. Every time Friday comes around, it means I can finally rest. After a week that's been so full and hectic with the nightly all-star good night live streams, every day at 12:10, every day. Wow, just live streaming. So when Friday comes, I feel especially relaxed and especially happy, really happy. Okay, time to say goodnight and have some sparkling water. Good evening, good evening. What kind of gifts are being given out? Something about the Capital Master app notification from Capital Securities? I heard about it. I just saw it today too. It seems like their sales reps are sending out those messages. But apparently the quantity is limited, really limited, so I don't know if they've all been claimed already. I don't know if your sparkling water is what you're talking about, if that's the thing. I saw, after playing around with it this afternoon, our branch office sales reps were saying it seems like there's some kind of giveaway. Is that so-called Wealth God water actually just fortune water? And then there's also that Guai Guai snack, the Wealth God edition of Guai Guai. That one's pretty special. The packaging for that Guai Guai, I still have it, because the packaging is completely customized for Capital Securities. Our company actually commissioned Guai Guai to make it. That particular guai guai is one of a kind. There's no second bag like it in the world. That packaging literally says capital securities, something like Wealth Got Guai Guai or something about fortune or whatever. Last year, I showed it to everyone. Last year, I gave it to Dad. Do we still have that guai guai? Is there any left? We did give some out, probably gave out those things and maybe some red envelopes or something else. I'm not sure. Anyway, if you're curious, just ask your broker. If there's still some left, you might still be able to get one. If they're all gone, then that's it. And as for the eyebrow pencil, that's just how it is. Yeah, that's it. So I'm guessing that's probably the gift we're talking about. Okay, now let's go back and take a look at the initial values for the US 1-year and 5-year inflation expectations for January. So again, just a reminder for everyone, the quantity is limited. I don't even know if you'll be able to get one, but it's just a little gift to bring everyone some joy and good luck. Just ask your salesperson and see if there are any left. Now, as for the initial values of the 1-year and 5-year inflation expectations, the previous value for 1 year was 4.2, and the forecast is a slight drop to 4.1. For 5 years, the previous value was 3.2, and the forecast is 3.3. Overall, you can see this trend on the chart. You can see that right now, whether it's the 1-year or 5-year inflation expectations, the market's outlook for inflation has indeed been gradually coming down from the previous highs. For example, the 1-year expectation used to be as high as 6%, but it's been dropping and has now fallen to 4.2%. The 5-year expectation has also dropped from 4.41% down to 3.2%. This shows the market is indeed expecting future inflation to cool down. And don't forget, as long as inflation is trending downward, it will naturally be favorable for the Federal Reserve to adopt a more accommodative monetary policy, moving toward interest rate cuts. So looking at this year, I think there's still a chance for a rate cut in both the first and second half of the year. It's something to look forward to. Also, at 11 p.m. tonight, another data release, the preliminary University of Michigan Consumer Sentiment Index for January. Previous reading 52.9, forecast 53.5. Keep an eye on these two data points. They'll be announced at 11 p.m. tonight. Of course, the most important thing is still that thing at 9:30. We'll walk everyone through the final numbers. All right, good evening, little donkey. Good evening, little cat. The Taiwan stock market is really strong. Yes, it's still very strong. But I still want to remind everyone about the new high trading volume. Didn't we talk about this on the show a couple of days ago? Right after that huge volume, I remember that either the next day or the day after, the Taiwan stock market hit a new intraday high. So the volume and price didn't peak on the same day, but the high price already set a new record. It already broke through. So like I said, it wasn't the closing price, just the intraday price hit a new high. So going forward, we just need to be a little bit cautious. Even though the structure of the Taiwan and US stock market is still bullish and hasn't changed, it's just that when the short-term price deviates and rises too quickly or too sharply, we need to be careful. It's inevitable that we'll encounter a technical correction when the positive price deviation gets too large. At times like this, if you see a new high, try to take some profits at the top, then wait for a pullback to look for another buying opportunity. As for whether the price will pull back and you might not have time to buy before it shoots up again and never comes back down, that's also possible. So what should you do? What should you do when the price is high? Don't sell everything at once. Take profits in batches. I always tell everyone, if you take profits in batches, take partial profits, and build your positions in stages, you'll have a lot more flexibility in your trading. When taking partial profits as price hits new highs, sell a quarter, a third, or half. Then when it pulls back, slowly rebuild your position, bit by bit. Operating like this, buying and selling as price moves, your wealth will gradually accumulate, little by little, instead of all at once. If you just hold on every day, always wondering when it will hit a new high, always hoping for a higher point and guessing where that high might be, well, if that height does come and you react too late, by the time you realize it, the price has already gone up and then come back down. In the end, it all amounts to nothing, right? You might as well just put your money in the bank and earn a fixed deposit interest of 2%. That would be better, wouldn't it? So when you're trading stocks, remember that you need to go back and forth, back and forth. Some trades are for the short term, and some are stable, medium to long-term swing trades. You need to make distinctions, really separate things out. And when it comes to taking partial profits or making adjustments or even entering positions, you should always plan your moves in batches. You have to be prepared for that. It's not about just stubbornly holding on no matter what, riding it all the way up and then all the way down. That really doesn't make much sense when you operate like that. In fact, you'll end up missing out on a lot of investment opportunities. Yeah. All right, let's go back and take a look at something else. Memory stocks have been rising like crazy. Yeah, it's been really wild. But today, they dropped just as dramatically. Look at Nanya Technology and Winbond today. Both fell sharply. Since Nanya and Winbond dropped today, they just kept dropping and dropping all the way down. Today, I also want to add something about another company. In the past couple of days, we talked about SanDisk and WDC, right? Today, I want to talk to everyone about Micron. Now, it's not bad news about Micron, but you do need to pay a bit of attention. I still want to remind everyone, you really need to keep a high-level mindset and maintain a sense of crisis. I'm not pessimistic or telling everyone to short it. You don't need to short it nor be negative. But keeping a high-level mindset and being cautious means waiting for a pullback before buying, or choosing a safer, more stable approach first. Prioritize safety and stability. Ultimately, how much you make depends on each person's situation. What about the UN? What did they say? They said tariff intensification increases geopolitical risks, predicting this year's GDP will slow to 2.7%. That's only 0.1% less than last year. Not a huge difference. Global trade growth is also dropping sharply due to tariff wars. So global trade growth for the year is expected to fall significantly from last year's 3.8% to 2.2%. You might ask, teacher, does that mean global GDP and trade are cooling off? Wow, does that mean the US stock market will crash? Not necessarily. Why? Because the US is actually the opposite. Why is the US the exact opposite according to the United Nations? Because the US is actively implementing a lot of expansionary fiscal and monetary policies, and with the election coming up next year, they've actually raised the US GDP from last year's 1.9% to 2%, going against the trend. This is different from the rest of the world. Globally, GDP is dropping from 2.8% to 2.7%, right? Global trade growth is falling from 3.8% to 2.2%, but the US GDP has actually gone up from 1.9%. It was slightly raised to just about 2%, while China's GDP dropped from 4.9% to 4.6%. So what does this mean? Actually, the United Nations is also aware that under the premise of Trump's administration, and with the 2026 election coming up, the US will roll out a lot of policies, monetary and fiscal policies, various measures to stimulate the economy. That's why this year, the US GDP has actually increased from 1.9% to 2%. And in terms of the Federal Reserve, Milan continues to support rate cuts, supporting a cut of 50 basis points up to 100 basis points. As of today, they're even talking about raising the forecast for rate cuts, hoping for a total of 150 basis points in cuts this year. So everyone should have a general idea by now. 1 basis point it means 0.01%. 1 basis point represents 0.01%. So 150 basis points means they're hoping for a 1.5% rate cut, which is a lot. Basically, that's 6 quarter-point cuts, cutting 6 times. Anyway, just take it as information. Milan is on Trump's side. He's always been dovish. And this year, anyway, a lot of officials have changed. They've changed board members, changed the Fed chair, and even the presidents of the 4 different regional Federal Reserve banks are being replaced. So there are a lot of areas where Trump can exert his influence. As for Milan, of course, he continues to take a dovish stance. Additionally, Besson said that the Fed should keep pushing for rate cuts, and he mentioned Trump. Trump, you know? Basically, it's 98.8%, which means it's almost certain that the next Fed chair nominee will be announced this month in January. According to current market surveys, the former board member named Walsh has about a 41% chance of being selected. Another candidate, the current economic advisor Hassett, has a 39% chance. So they're pretty much neck and neck, just a 2% difference. So who will actually win? I really don't know. There's also another current board member, Waller, who has a 12% chance of winning. So right now, it looks like no matter which of these 3 ends up being chosen, in the end, they'll be carrying out Trump's dovish policies. Because don't forget, as long as Trump is in office, he wants to cut interest rates. Cutting interest rates saves the economy. Cutting rates cures all problems. Cutting rates saves the stock market. And this year is also an election year. So in this kind of, let's say in this kind of context, Trump will definitely pull out all the stops and roll out a lot of attractive monetary and fiscal policies. So for the stock market and the economy, this will generally be positive. That's why this year, if you have the chance, you should really seize the opportunity. The year of the horse is a year of galloping ahead. The year of the horse is all about surging forward, and when it surges, it goes up and down. Just remember, you have to hold the reins tight. Really get ready because the volatility might keep going, shaking up and down, with lots of swings. Still, like I said before, it won't be as dramatic as last year's 12-year cycle. That year, the market shot up by 3,000 points, dropped by 5,000, then 4,000, then 3,000, and then surged up by 10,000 points again. The volatility won't be that big, but it'll keep fluctuating like this. Boom, 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 boom. It's like when people ride a horse. It's not thump, 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 but more like bouncing along at certain points. So as long as you hold on tight and sit steady, if you find good companies and good stocks, remember to hold on to them tightly. Hold on and then trade up and down. When the market goes up, you can sell a bit, and when it drops, as long as you're sitting steady, look for some good companies. All right, now as for Trump, Trump is really interesting. Good evening, everyone, and good night to Hang as well. Whatever you do, don't short. That's right. That's right. You can stay on the sidelines and not buy, but don't short this year. Don't short this year. This goes for both the Taiwan and US stock markets. And don't forget, if I remember correctly, isn't Taiwan also having mayoral elections this year? Right, there are elections coming up, right? And in the US, it's even more important. The House and Senate are both up for election. So in an election year, you really shouldn't be recklessly shorting the market. During election years, there are always a lot of favorable policies, all kinds of incentives, because no matter what, they don't want the stock market to fall. If the market drops, it just looks bad, and it feels like they've lost both face and substance. So as long as it's an election year, it's the same in every country. So it's better for you to just stay on the sidelines. If you don't want to chase, if you're too scared to chase, then just stay out of the market. Don't get too caught up in thinking, I can't stand watching the index go up anymore. I missed out on the long side, so I want to short it. Don't do that, because shorting this year probably won't be easy to profit from. There are just too many big government players and major funds trying to prop up the index and create a bullish atmosphere. So if you insist on going against the government at this time, you might not necessarily get the upper hand. Right. That's pretty much how it is. Okay, now Trump, when it comes to retirement policies, he proposes a lot. He keeps pushing for policies, constantly cutting taxes, slashing all sorts of things. So what did he say today? He did something today, and honestly, I think it's pretty impressive. I guess only Trump has the kind of execution and creativity to actually pull this off. Probably during Biden's era, this wouldn't have happened, because Biden tends to just follow the rules obediently. He just follows the rules, does things by the book, so it's pretty unlikely that you'd see this kind of out-of-the-box thinking from him. But, that can be both good and bad. So what did Trump do? He made a statement saying the Fed just keeps refusing to cut interest rates. They're not actively lowering rates, they're not doing QE quickly enough, and there are a lot of things he just can't stand about Powell. So he figured, well, anyway, the chairman is stepping down this May, so let's just wait until May to clean up the mess. But before May, he made a lot of moves, like the tariff war with Mexico, and he also rolled out a lot of fiscal stimulus measures. This is all part of it, too. Since he demanded it, he asked the two agencies, Fannie Mae and Freddie Mac, to use $200 billion to directly purchase MBS, which are mortgage-backed securities. So buy up MBS. And what's the goal? His goal is, the sole purpose is to lower mortgage rates and ease the financial burden on the public when buying homes. So in effect, he's proposing a presidential version of QE. Normally, buying things like government bonds or MBS is something the Federal Reserve does. They use open market operations to buy these bonds, buy these MBS, buy these government securities. And why do they do that? When you buy these bonds, when you buy these things, right? Those things become assets of the Federal Reserve, the central bank. After buying them, what happens? Why do you buy bonds? You pay money out, right? The central bank buys bonds and pays out cash. So there's more cash circulating in the market. So now, with more hot money and capital in the market, of course that stimulates the economy, boosts economic activity, and increases what's called the money multiplier. The whole flow of funds just keeps coming in endlessly. This is how it works. This is how QE operates. But then they realized, since Powell also doesn't want to do this kind of thing, and he's not cutting interest rates either, fine. So they directly required the two housing agencies to buy $200 billion worth of MBS. In other words, they put forward a small-scale, presidential, Trump-style QE1, basically a quantitative easing move. And of course, this kind of action narrows the relevant interest rate spreads. What's interesting is that Citibank actually went and built a model to estimate this. If Trump were to inject $200 billion to buy MBS, it would probably bring down the 30-year mortgage rates. In Taiwan right now, most people are getting 30-year mortgages. For some young people, if you're in your 20s or 30s, you might even be able to get a 40-year mortgage. Actually, back in my parents' generation, mortgages were usually for 20 years. Because back then, real estate prices were lower. They weren't as crazy as they are now. With a 20-year mortgage back then, if you worked hard at your job, you could probably pay it off before you retire. But that's not the case now. With a 30-year mortgage, once you take it on, you might still not be able to pay it off even by the time you retire. With a 40-year mortgage, you'd basically be paying it off all the way to your grave. That's the idea. You'd be carrying that debt the whole way. If you start buying a house at 30, you can't really expect to be paying a 40-year mortgage until you're 70. Usually, you should try to pay it off earlier. But if you're really unlucky and end up with a 40-year mortgage, buying a house at 30 and paying it off over 40 years, wouldn't that mean you just finished paying it off as you're about to go into your grave? You'd be done paying it off right as you pass away. And then what? It just gets passed on to the next generation. That's just how it ends up. It turns out like that. And if you retire at 60 or 65, you might not even have enough money to pay off the mortgage for the next 5 to 10 years. So is it actually better to have a longer mortgage term or a shorter one? Honestly, it really depends on your own perspective. Anyway, coming back to the point, in the US right now, the most common is still the 30-year mortgage. So for this 30-year mortgage, what's the current interest rate? It's 6.16%. That's scary. In Taiwan, mortgage rates are about 2.1% to 2.2%, roughly in the 2.1 to 2.3 range. But in the US, the 30-year mortgage rate is 6.16%. And then, according to Citi, after this so-called presidential QE is set in motion, it might be able to lower mortgage rates by 0.1% to 0.5%, which is about 1 to 2 basis points. Basically, Trump wants to bring it down by 1 to 2 basis points himself. Even the Treasury Secretary said he's implementing it. For example, Trump proposed allowing interest on auto loans to be tax deductible. All these moves, whatever he does, are really just to save his campaign and boost his poll numbers. How do you know? All over the world, it's the same everywhere, if you want voters to choose you. So how do you boost your poll numbers? It's simple. You just have to make sure people have enough to eat, take care of the economy for ordinary folks. If the economy is good, if things are going well, then people will vote for the party in power. That's really it. Regular people don't have a lot of demands or extravagant expectations. As long as I have enough to eat and warm clothes to wear, and my salary doesn't go down, and housing prices don't skyrocket so much that I can't afford to buy a home or a car, if I can live and work in peace, then the party that lets me do that is a good party. That's basically it. And it's the same everywhere in the world. So Trump is very familiar with this kind of thing. He said, fine, in order to save my poll numbers, his poll numbers did go up. His poll numbers did go up because of these actions, by another 2 to 3% actually. He went up to around 42 or 43%. The polls did rise because he knows very well that as long as you make the people happy, as long as costs go down, people are making money, the economy is good, the stock market is good, and people are actually benefiting and getting money in their hands, then naturally people will vote for the Republican Party. That's just how it is. This is a very realistic situation. If the economy isn't doing well and inflation goes up a lot, like for example when someone's economy is bad and prices skyrocket, like in Iran, what happens? There's internal unrest. There will be protests. It's the same everywhere. Venezuela and all those places, it's all the same. So the economy is the #1 priority. If the economy is good, everything else is easier to handle. So you have to understand that before November, all of Trump's policies are basically aimed at pleasing the voters. Even this, which I think is pretty wild, like a presidential version of QE. He can come up with that too. I'm guessing this idea probably came from the Treasury Secretary or one of his economic advisors. Otherwise, I really couldn't have imagined that he would actually ask Fannie Mae and Freddie Mac to spend $200 billion to buy MBS. I honestly never thought something like this was possible. Normally, you'd think QE is something the Fed would handle. How could Trump be making this kind of request? So overall, there's a lot of substance here. Let's just wait and see what happens. Also, regarding the House of Representatives, they passed something related to Obama's healthcare reform. Just so you know, it's been extended for 3 years. Now the question is whether this bill will pass in the Senate. Anyway, let's just wait and see. Even though there are still some issues without consensus right now, I think given the demands of the election, it will definitely pass in the end. It's bound to go through, because if it's extended for 3 more years, people will be happy. People will say, wow, my healthcare subsidies. Healthcare subsidies, wow, not bad. I don't have to pay so much for medicine or whatever. I don't have to spend so much money to see a doctor. So as long as you pass it, you're good. Whichever party tries to block this kind of livelihood bill, the people just won't vote for them. That's just the reality. So will this bill eventually pass? For the sake of the election, they'll all get passed. They'll all get passed. No matter if the government shuts down before the election, no matter what they say. As long as the bill benefits the people this year, it'll get passed. Of course, that's right. They'll all get passed, which is generally good for businesses, the economy, the public, and even the stock market. That's why, just like this time, it's the same response, like the sparkling water we just talked about. Still, what that little donkey said makes sense. He said, you don't have to buy, but whatever you do, don't short it. That's because there's just too much policy support. As for the timing and rhythm of rate cuts, for now it's at 4.18, and the terminal rate is holding around 3.05. The market still expects 2 rate cuts, and there hasn't been much change in the dollar index. In the short term, sometimes it rebounds, bouncing back to the 50 and 200-day moving averages. So let's keep an eye on it, because from last June until now, every time it's reached the 50-day moving average or the 200-day moving average, there's usually been some downward pressure. For example, last June and July, every time it hit the 50-day moving average, it would get pushed back down, even if it didn't quite touch it. Then, after finally breaking above it, it ran into resistance at the 200-day moving average. Last November, it got pushed down twice by that yearly moving average. And now, once again, it's coming up against this downward resistance. Will it break through this time? For now, it looks like in the short term, I think it's more likely to remain in a weak, fluctuating pattern. Today, it only went up by 0.11%, which keeps it in a weak trend. As for power supply risks, it's pretty much the same whirlwind everywhere, honestly. Not much difference. Every day, well, today there's something new, but if you talk about Venezuela, it's basically just like that. As for, who is it? Oh, Denmark, Greenland, well, that's probably something they'll discuss next week. They'll gradually talk about it then. As for Trump, he said he hopes to push oil prices down below $50. Also, the U.S. Secretary of Energy mentioned that Venezuela's crude oil output is expected to take about 18 months, a year and a half. It will increase by 50%. Right now, they're producing less than 1 million barrels a day. Wow. So that means he said after a year and a half, maybe some of the refining equipment, oil extraction equipment, and things like diluents for refining and so on, those kinds of things. All of them will be in place, whether it's Chevron, ExxonMobil, or other oil companies. They'll all go to Venezuela, maybe to build factories or make investments. Many companies around the world also want to rush in and grab a piece of the big pie that is Venezuela, because the US might relax its economic sanctions, loosen restrictions on crude oil exports. So when those sanctions are eased, the stock market and economy will rise. I mean Venezuela's. The old things will come back up. Before things pick up, companies from many countries want to get in position first. Why? To make money from that wave of growth. Because once things open up and the economic sanctions are lifted, the existing production, which is currently under 1 million barrels a day, could in about a year and a half increase to over 1.5 million barrels. So this, of course, is also a positive for the US because if crude oil production increases, the US basically can't lose. It's a sure win when it comes to crude oil. Also, with the increase in crude oil production, of course, crude oil prices will drop. When oil prices fall, inflation will go down. Lower inflation is exactly what the US, what Trump wants, and it's also the most important prerequisite for the Federal Reserve to implement a more relaxed monetary policy. All right, Amy, good evening, and fire god, good night to you too. Okay, so what else? So what's this? America again? They're talking about possibly spending between $10,000 and $100,000, which is pretty much what we guessed yesterday. Yesterday, we were guessing if they might give every person in Greenland $100,000. So today, the US is discussing whether to give every resident of Greenland $100,000 each, and then ask them if they're willing to become Americans. But the thing is, most people in Greenland aren't willing to become a US territory. Anyway, we'll just have to see how it goes. Next week, Rubio is going to... Who is he meeting? Rubio is going to negotiate with Denmark. Anyway, Greenland has its own, just so everyone knows, a little background, Greenland has its own strategic importance in the Arctic region. It's probably about counterbalancing China's and Russia's missiles. Previously, it already has strategic significance, and about 1/3 of the world's rare earth mineral reserves are there, along with oil and natural gas. It's incredible. So, of course, the US wants to claim it. That's basically the idea. As for crude oil prices right now, they're also seeing a slight rebound, up 0.93. The bearish structure hasn't changed at the moment. As for the fresh news I just mentioned today, pay a little attention to this. Some people say they want to become Americans, right? $100,000 to become an American, but there's nothing we can do. We don't live in Greenland. Cal, I really want to be an American too. America's developing, but there's nothing we can do. And we don't live in Greenland. Greenland is basically covered in snowmen all year round. It's unbelievable, really tough. Sigh, if you want to be a resident there, you'd have to put up with the temperatures. For someone like me, who's sensitive to both cold and heat, I probably couldn't handle it either. Anyway, let's get to today's new topic. This is about the US Embassy, the warning from the US Embassy. That's what it is. This is about the possibility of increased geopolitical risks. The warning says that in the coming days, Ukraine could face large-scale airstrikes. Why? Because of Russia. Russia said that on January 8th, originally Ukraine and its other European allies were talking about, oh, we want to form some kind of Paris summit agreement. As long as there was a ceasefire between Ukraine and Russia, after the ceasefire, as long as Ukraine and Russia stop fighting, then the United States would lead a monitoring mechanism to ensure that Russia doesn't send troops again, doesn't start another war, since there's already a ceasefire there. And once a ceasefire is in place, European countries would send peacekeeping forces, with multinational troops jointly stationed and deployed in Ukraine. So originally, everyone had agreed on this. Ukraine, the European countries, and the Western countries had all agreed, but they hadn't reached any agreement with Russia. Then Moscow came out directly and said, we oppose this. The reason why is pretty obvious to everyone. Why did Russia want to go to war? The reason I want to attack Ukraine is because Ukraine said it wanted to join NATO. Right, so why join NATO? To join the North Atlantic Treaty Organization. What's the purpose of joining NATO? Basically, if you join NATO, and most NATO members are European countries, if any member country in NATO is attacked or faces war, the other member countries can send troops to help out. Now, if you think about it, Ukraine is right next to Russia. If Ukraine joins NATO, Russia would feel threatened from all sides, like having a knife in its back. It's like, wow, even my neighbor right next door is joining NATO. And Russia doesn't necessarily get along well with European countries. Not necessarily, and now my neighbor next door also wants to join NATO. Wow. So one day it would mean that NATO's influence keeps getting closer and closer to Russia. So why did Russia want to attack Ukraine in the first place? This is one of the most important main reasons. So now, what is he saying? Well, let's suppose there's a ceasefire. If there's a ceasefire and Ukraine has these multinational European troops stationed inside the country, isn't that basically the same thing as what Russia didn't want NATO to do in the first place? Russia didn't want Ukraine to join NATO because they didn't want Ukraine to become part of the NATO-European alliance. But now, if a ceasefire is confirmed and there are still European soldiers inside Ukraine, European multinational troops from various countries, doesn't that mean Ukraine is joining NATO? Because that would mean Ukraine would have many European soldiers inside, making me feel uneasy, like a thorn. That's why Moscow directly refused. So when the US embassy says Russia might continue bombing Ukraine, I think Ukrainian fighters are just dragging things out as long as they can. But will dragging things out cause energy prices to soar? That opportunity doesn't exist because everything is separate. Bridges are bridges, roads are roads, they're not the same. This geopolitical risk has been hyped for almost 4 years, and the impact hasn't been significant. It hasn't affected oil prices. As for Ukraine and Russia, it's going to drag on indefinitely. Now, about the good economic data. While we're talking, it's already 8:30. At 8:30, let's take a look at the just released latest non-farm payroll numbers and the unemployment rate. The data that just came out is the US unemployment rate for December. It's at 4.4%, which is good. 4.4% is lower than the expected 4.5% and also lower than the previous 4.6%. This means the US unemployment rate isn't as bad as thought. And for new jobs, it came in at 50,000. 50,000 is extremely low, and it's also lower than the previous figure. 50,000 is lower than expected, and lower than the previous figure, but it doesn't indicate a recession. Regarding average hourly earnings, the monthly rate stayed at 0.3%, matching expectations. The annual rate is 3.8%, slightly higher than the market's expectation of 3.6%. Looking at the overall picture, overall, here's how we interpret it. It's basically one good and one bad, one good and one bad. So what's the good part? From an economic perspective, the unemployment rate dropping to 4.4% means that the current job market isn't as bad as people imagined. Now, what about the number of new jobs? Well, only 50,000 jobs were added, which in a way suggests that things aren't as bad as they could be, but they're not that great either. So whether we're talking about the economy or whether the Federal Reserve will cut interest rates, it ends up being a mixed bag. One good, one bad. The job market isn't as weak as people thought, but it's also not as strong as expected. That's why the Fed is likely to stay in a wait-and-see mode in January. And because they're waiting and watching, it's a mixed result, which is also why today's US stock market is reacting the way it is. I think it's actually pretty neutral. It's not completely bullish or completely bearish, because just now the data showed that the unemployment rate went down. The GSM performed pretty well, but the non-farm payroll numbers dropped to 50,000, which is below expectations and also lower than the previous figure. So overall, it's a mixed result. One good, one bad. So for the US stock market, I think today, whether it's the futures market or when the US market opens, it's probably going to be more of a choppy up and down movement. As for what the market is focusing on right now, it seems like the main thing is still waiting to see whether the Supreme Court will rule the tariffs as legal or illegal. That's also a huge, huge uncertainty. So let's review the recently released non-farm payroll and unemployment numbers. They're kind of a mixed bag, one good and one bad. As for the monthly and yearly wage growth, it's actually okay. It hasn't spiked too high. Overall, labor inflation or labor cost inflation isn't out of control. So for the Federal Reserve, it probably means they're not in a rush to do anything drastic. In January, they should just keep watching and waiting. Also, new housing starts and building permits were released. Housing starts came in at 1.246 million units, below expectations, while building permits were at 1.41 million, above expectations. So like before, real estate data is a mixed bag, one good and one bad. Basically, that's how it is. It's stuck in that spot. This was just at 9:30, and it's also the most important economic data of the week. I wanted to give everyone this update. All right, moving on to the industry side of things. Let's take a look at the industry news. There's word that Qualcomm is in talks with Samsung about collaborating on 2-nanometer chip foundry services. They've reportedly already completed the initial design phase. The market is speculating about why Qualcomm is choosing Samsung, and it's because Samsung's foundry prices are lower than TSMC's. It's 30% cheaper. So that's quite a significant difference, 30% cheaper. But everyone doesn't need to worry too much, because Qualcomm has always used a dual foundry strategy when it comes to chip manufacturing. Why a dual foundry strategy? Well, in case one day Whether it's Samsung or TSMC, what if something happens? If their production capacity runs into issues or unexpected situations prevent delivery, what do? You need a backup plan. That's why Qualcomm works with both Samsung and TSMC for manufacturing. Plus, considering TSMC's own situation, their process technology, yield rates, IP positioning, or fully booked advanced process capacity, even if Qualcomm really does place orders with Samsung, in fact, the impact on TSMC is still limited. Yeah, it's still limited. So when it comes to Qualcomm talking to Samsung about 2nm related foundry opportunities, we can take a more neutral view for now. There will be an impact, but the impact will be limited, because just with TSMC handling all these advanced process foundry orders, they already cannot keep up with the demand. Orders just keep coming in. Also, today, the latest news about our national treasure, TSMC, is that their revenue has been announced. December's revenue reached new Taiwan dollars 335 billion, which is a 2.5% decrease from the previous month, but a 20% increase year over year. As for fourth quarter revenue, it is as high as 1.046 trillion new Taiwan dollars, a year-over-year increase of 20.4%, which was also expected. For the fourth quarter alone, just a single quarter, the revenue also set a new all-time high for a single quarter. It's extremely high. This is the first time it has surpassed 1 trillion new Taiwan dollars, breaking through the 1 trillion mark. For the entire year of 2025, last year, total annual revenue was 3.8 trillion, which is extremely high, with an annual growth of nearly 32%. So this is due to demand for things like AI. Both the fourth quarter revenue and the full year revenue have hit record highs, all of them reaching new highs. So this is a clear indicator, and I can confidently tell everyone that at TSMC's earnings call next week on January 15th, the data and financial report they announce should be excellent. Oh, it should all be great. So tonight, let's take a look at TSMC and see if it might have a chance to drive up the US Electronics Index, the Philadelphia Semiconductor Index, and so on, or even push the Taiwan Stock Index to new highs next week. There might be a chance, but we still need to pay a bit of attention and be cautious. Anyway, everyone can imagine that on January 15th, TSMC will probably announce some good news, like a solid financial report, good revenue outlook, and possibly even an increase in capital expenditures. All good, all positive news. So the rally in both the Taiwan and US stock markets might have a chance to continue up until January 15th. Before TSMC's earnings call, there should still be room for speculation, but once it's announced, after that, you need to watch out. Maybe on the very day the news is announced, there could be a so-called pullback or correction after a big run-up, or some very short-term volatility as people sell on the good news. So you need to be a bit cautious about that. But for now, TSMC's revenue outlook still looks pretty good. Honestly, everything seems great. So if you're a long-term, really long-term investor, you don't need to worry about these short-term fluctuations. But if you're the type who buys one week and plans to sell in a week or two, like a short-term trader, then you need to be ready at any time. Keep a close eye on TSMC, whether it's monthly revenue, quarterly revenue, or news from earnings calls and so on. You need to observe whether you should hold, add to your position, or build your position in batches. Just keep an eye on it. But if you're a long-term investor, you really don't need to worry about this. Basically, just hold on and ride it all the way up. As long as the fundamentals, revenue, and EPS haven't declined, there's no need to worry too much. Okay, someone mentioned being concerned that others have already gotten in early. Of course, 100% there are always people who get in early. Every stock. Before any financial report is released, there are always people who already know the news and get in ahead of time. This time with TSMC, and with many companies, let's talk about something a bit more realistic. Let me give you an example. For example, every year when we read the news in the Industrial and Commercial Times, Economic Daily News, or watch channels like US TV, Era News, or ETTV. There are so many, right? When you see this news, it's probably the next morning. Maybe you get the newspaper at 6 or 7 in the morning, fresh and hot right in front of you, right? It's right in front of you. But you have to think, when it's in front of you, it's not like it was just written at 7 that morning. The reporter at the news agency didn't just finish writing it. How long did it take? They finished it the day before. They finished writing it today, it's printed overnight, and in the morning, 6 or 7, delivered to your doorstep. You get this fresh, hot newspaper and see, wow, today TSMC says they've hit a record high, 12D, 4D revenue. It's amazing. Did you see this news next morning? Right? But the reporter, what did they write the day before? If the reporter wrote it the day before, let me ask you, did they already know the news the day before it was released? They knew the news the day before, because they hadn't published the article yet. They just had to write it, right? Now let's go back even further. How do these reporters write their news? They go to attend the earnings call, they have to listen to the company's financial report and its interpretation. Now, when it comes to interpreting the financial report, who would know first? The company's accountants and finance people would know first, right? The company's business team. Frontline sales staff already know if revenue is good or not, if orders are strong or not. Company executives and major shareholders have known for a long time, as have finance people. Only then do they hold the earnings call to tell reporters and institutional investors. So who knows first? Major shareholders and insiders all know. Everyone inside already knows. The information we get is always much later, much later. Since it's such delayed information, so you need to stick to your principles. What I'm saying applies to all companies, every single one. You have to stick to your principles. When a company makes the news with some positive announcement, that's usually a short-term high point for the stock price. Most of the time, like 80 or 90% of the time. That's how it goes. So don't see some good news in the paper and think, wow, this is great, let's buy at the daily limit price. Don't do that kind of thing, because you'll often end up buying at the highest price of the day. If the price pulls back and the fundamentals are still solid, then after some consolidation and fluctuation, there will still be good buying opportunities. But you have to wait. You really have to be patient. This is just the reality of things. Our news, the information we get, will never be faster than what insiders know. It just won't be that quick, unless you have insider information. But insider trading is illegal. So there's no way we could have insider information. That's just not possible, and it's something that can't be brought to light. So to put it simply, you just have to rely on the fundamentals. Pay attention to earnings reports, check the group's morning call every day, and watch the group's shows. That's pretty much how it goes. Also, good evening to Shirley8205 and Donggian, right? Donggian, Wenan. Oh, and then what is this? Let's take a look. Just now, that was TSMC, right? As for TSMC, some people say, read the newspaper. Read the newspaper, watch TV, buy stocks, read the newspaper, watch TV, and buy. But all of that is really lagging behind. If you watch those TV shows, some so-called experts talk about stocks, or you listen to some so-called famous teachers or whoever saying something, actually... Yeah, anyway, all we can say is, because we're in this circle, actually I have a lot of information. There's a lot of insider info or special things that we just can't talk about. So all we can say is, on your investment journey, you should do your best to protect yourself. Just protect yourself. And when you see some news or hear some things from financial media or whatever they're saying, if you blindly believe everything, it's better not to read. Everyone needs to do their own homework. If a talking head recommends a stock, check for yourself. Is the financial report good? Are revenue solid? Is the shareholding structure stable? Are foreign, institutional, and investment trusts holding steady? Combine that with technical analysis and other factors. If you do your own research, I think it's much safer. Don't just watch TVE or read the newspaper and then jump into stocks. Your risk will be much higher that way, much higher. That's about all I can cover here. Okay, as for TSMC's technical analysis, just take a look. Yesterday, it dipped slightly by 0.21%. As for this neckline, as long as it doesn't break below this very short-term neckline, there's no need to worry too much. Even if it does break, there's still support from the monthly and quarterly moving averages trending upward. So overall, I think TSMC's fundamentals and revenue are solid, and pay special attention to the earnings call on January 15th. For now, the technicals are still leaning bullish. All right, good night from Dongdian. Now, about Micron and memory stocks, are they good? Unbelievably good, really. There's a constant shortage. People are talking about shortages not just in 2024, but through 2025, 2026, and some even say into 2027. Everyone's saying there won't be enough production capacity. Who said this? Micron did. Micron said it themselves at this recent investor conference, hosted by JPMorgan Chase. They said that right now, the company's production capacity can only meet 50 to 67% of the needs of their most important key customers. In other words, they can't meet 100% of the demand. Why? Because the volume is just too large. The demand is too high, and they simply can't satisfy everyone. He said that even with their new wafer fab in Idaho, USA, which is set to open in mid-2027, even if they start mass production a quarter ahead of schedule, they still won't be able to support all of the demand. There's nothing they can do about it. The demand. We just can't meet it. It's always supply falling short of demand. So in the end, even now, at the beginning of 2026, he's already saying they won't be able to supply all the volume needed by mid-2027. So what happens? Once again, everything gets sold out. Whatever you order, that's what gets sold. Just completely sold out. And again, you just can't buy it. Even if you want to, you can't get it. That's why Xiao Momo told Datong that for the end of 2026, regardless of the price, it might still go up another 60% this year. So, is the memory market doing well in terms of revenue and profit? It's doing incredibly well because it's always in demand, and I'm always selling. Always selling. Take Micron, Samsung, and SK Hynix, for example. Their HBM high bandwidth memory is selling like crazy right now. And even high-end double data rate 5 memory, which is also used in AI, is selling out everywhere. For something like HBM, this kind of high bandwidth memory, it's just A lot of these memory chips are stacked, stacked, and stacked again using 3D stacking technology, maybe 8 or 9 layers stacked together to create these high-end memory modules. And this kind of specialized technology isn't something just anyone can do. Globally, it's really just Micron, SK Hynix, and Samsung, no one else. Alright, so because there's a shortage, everyone keeps buying these high-end memory chips, which ends up squeezing out the production capacity for the more regular consumer electronics, or lower-end memory chips. So you can actually see this happening. High-end HBM and DDR5 prices are rising. Lower-end, commonly used consumer DDR4 is also in short supply due to production capacity shifts. This creates a shortage. DDR4 prices continue to rise. Companies like Nanya Technology and Winbond are also seeing price increases. Yeah, the prices just keep going up and up. It's crazy. The market is already reflecting this. The positive factors for this year are gradually being reflected in next year's outlook too, so everyone should pay attention. Micron has told everyone that right now, production capacity can't keep up with demand, and demand is extremely strong. That's true. That's a fact. This is absolutely true. This strong demand could last all the way into next year, and unless the AI boom ends between 2026 and 2027, basically it's just going to keep going. However, when it comes to short-term trading, it's still the same old advice. Yesterday, Micron dropped 3.7%. We mentioned to everyone a couple of days ago, just remember to watch out when this kind of good news comes out. Micron's stock price behaves oddly. It tends to rise along the 20 and 50-day moving averages, but every time there's a positive deviation, whenever it gets too far from the 20 or 50-day moving average, whenever it suddenly surges too much, when the positive deviation gets too large, it will correct itself. Every time the positive deviation is too big, whether it's from the 20-day or 50-day moving average, it will correct. It will pull back. When it corrects and gets close to the moving average again, that's when you look for a new buying opportunity. That's basically how it works. So in the short term, even if there's good news, that's great, but you just have to remember, when it comes to technical trading, try not to chase after high prices, because when the positive deviation is too large, you're bound to encounter correction pressure. Now, about Micron, and finally, let's talk about Warner Bros. Warner Bros. And Discovery are the same in this regard. Warner Bros., their board, I heard for the 8th time now, the 8th time, they've rejected Paramount's acquisition offer. Paramount wants to use, that's $30 per share, which comes out to about $108.5 billion in US dollars. And they want to merge with Warner Bros. The other company competing with them is Netflix. Remember last November, Netflix had a stock split, a 10-for-1 split. We talked about that, a 10-for-1 split. Usually after a stock split, it takes about a year of consolidation before the price goes up. That's how it was the last 2 times as well. Just a side note, keep that in mind. It takes a year of consolidation before it rises. Now, as for Netflix, they're also making a tender offer. How much are they offering? They're offering $82.7 billion US dollars for the acquisition. Alright, so now the Warner Bros. Board is considering accepting the lower offer from Netflix instead of the higher priced offer from Paramount. Why? Because they believe that Paramount's offer, which is close to $110 billion US dollars, is simply not feasible. Even though they mentioned things like financing, bank loans, venture capital, and even said that Oracle's big boss, Ellison, would use his personal holdings of $40.4 billion as collateral for the guarantee. But still. But his brother still felt like the risk was too high. To put it bluntly, he just didn't believe it. He just didn't trust it. In the end, he would offer $1,100 per share. But no matter what, I think this matter still has some bridges to cross. So why do I say this is a merger and acquisition driven by political considerations? You have to remember this. The big boss behind Paramount, the real big boss behind the scenes, is someone named, what's his name? David something? Ellison. David Ellison. Who is he? He's the son of Larry Ellison, the boss of Oracle. Yes, Ellison, the big boss of Oracle. He's a supporter of Trump, and his son is the founder of Paramount, which basically makes him the top CEO. So just think about it. That's why he has the means to put up the money. Why does he want to put up the money? It's because Warner Bros. Owns a very important company, CNN. CNN, you know, is a media company. So with Trump running for election this year, the media is crucial. The media is really important. They need to help him with some promotional efforts. Back then, CNN would often speak badly about Trump. So why is that? Why has Paramount always wanted to take over Warner Bros? Because the big boss at Paramount leans more towards Trump. Why? Because the Paramount boss's father is Oracle's founder, so everyone needs to understand Oracle's Ellison's background and connections. As for where Warner Bros. Will end up, who will acquire it, I think nobody really knows right now. I don't either. That's just regarding the stock price. It's fluctuating above the 20-day moving average, roughly oscillating between $27 and $30. Why? Because Netflix offered $27.75 and Paramount offered $30. So it's fluctuating in this range. So in the end, we really don't know who Warner Bros. Will end up giving it to. It's just that Warner Bros., yes, under Warner Bros., they do want CNN. That's correct. Warner Bros. Under their umbrella, well, good evening. Under Warner Bros., they currently have that series. Oh, not just that. HBO is also under Warner Bros. There's a channel called Discovery. Yes, Discovery. We think it's pretty good. Back in the day when we used to watch TV, Discovery was one of the business units under Warner Bros. The Discovery Channel was often placed right next to National Geographic, so sometimes you'd watch National Geographic and then switch to Discovery. I think there's a lot of knowledge you can get from it. It's pretty fun. If I remember correctly, National Geographic Channel is a company under Walt Disney, and they have a partnership. Walt Disney collaborates with National Geographic Channel, the National Geographic Society, and National Geographic Magazine, and together they run this channel. So one is under Walt Disney, and the other one we just mentioned, Warner Bros., they're not the same, you know? So keep this in mind, everyone. I think for political reasons, in the end, Trump might take a lot of actions behind the scenes, really push hard to force Warner Bros. To sell to Paramount. It's possible, because he wants to get his hands on CNN. Just be aware of this situation, that's enough. Moving on, in the US stock market pre-market trading, which stocks are up? For example, Vista Energy is up 11% in pre-market, and Constellation Energy is up 4.1%. Then there's Paramount, the one we've been talking about, the one in the sky, you know? Dance is up 2.69% in pre-market trading. Applied Materials, Intel, KLA Corporation are up 2% pre-market. Micron is up 1.6% pre-market. So tech stocks are basically still trending upward. Southwest Airlines is up 2.9%. General Motors is down pre-market. Why is General Motors dropping pre-market? It dropped by 1.77% because they said that their electric vehicle division, the EV segment, hasn't been selling well. So they've taken some asset impairment actions. We don't know exactly, but it's around $5 to $6 billion, almost $6 billion. So General Motors is down 1.77% pre-market in the US. Also, companies like Qualcomm, Analog Devices, Emerson Electric, and Microsoft are all down slightly pre-market by about 0.5% to 1%. Overall, I think the entire US stock market still looks relatively bullish at the moment. It's leaning towards the bulls. Of course, besides today's reaction to the non-farm payroll and unemployment rate data, the market's focus over the next couple of days will definitely be on the tariff dispute, specifically whether it's ruled legal or illegal. That will have a huge impact, affecting the US stock market and also causing volatility in international markets next week, including Taiwan stocks. So everyone should pay extra close attention to this. All right, as for the Dow Jones, today was about the same as yesterday, with a slight increase of 0.55%, staying above the 26-day moving average. The bullish structure hasn't changed. But for the Philadelphia Semiconductor Index, we need to be a bit more cautious. As I've mentioned before, the index dropped 1.83% yesterday. Its trend is starting to look like a rising wedge. Be very careful with this rising wedge pattern. If it fully forms, it often extends upward for a while, but eventually turns into a bearish pattern, making it easy for the index to fall. So we really don't want to see a rising wedge form. If it does and then breaks down, it usually signals a downward trend. At the moment, the rising wedge hasn't fully formed yet, but we need to be a bit cautious about the pressure from the upper boundary of the wedge, which hasn't been effectively broken through. In fact, it's starting to move downward, so pay attention if it continues to drop. The next support level is probably around the monthly and seasonal moving averages. These moving averages are right at the lower support of the rising wedge. It's crucial not to break below this level. If it does, the overall bullish structure will be damaged, so we need to be extra careful here. That's an additional note on the Philadelphia Semiconductor Index for everyone. Looking at the recent trends of Micron, Qualcomm, and TSMC, if they all perform well, then this crab pattern might not form, and there could be a chance for another breakout to the upside, but we still need to keep watching, keep observing. As for UMC, it's still moving pretty sluggishly, just hovering around the seasonal moving average. Overall, I think regardless of how the trade war plays out, after all, it's only the beginning of the year. Yeah, it's just getting started. Whether it's the Magnificent Seven or the Big Eight, no matter what, we're just at the start, in January, and I think there's still a long way to go. And don't forget, there's also an election coming up in November this year, so these available forces will gradually come into play. UMC went up a lot last year, so it's taking a bit of a breather at the beginning of January this year. But if we want to push the index higher in the future, the Magnificent Seven will still be a very important confidence indicator. Alright, that's all for the group-related content. Before the market opens at 5:50, we provide you with the latest updates. During the break, remember to like, subscribe, and share for us. Finally, I wish everyone smooth trading. See you next week!
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.